Julia, volumes, just hearing from Ben and LeBrun in the previous hour, unsurprisingly, not that great.
It was a slow day. We've got school holidays on, Japan was on holidays, and Hong Kong had a half day due to a typhoon. So not a lot of volume going through the market and losses across most of the market. There were some bright spots on the market, and some of those were in the financial space. We saw 52-week highs for BT Investments as well as Wilson HTM, and I guess the market's been holding up fairly well. So wealth managers, fund managers, these are the type of stocks that have been doing well in the type of market we're in at the moment. Also, we saw stocks reaching 52-week lows, and unfortunately it was a pretty bad day for Treasury Wines. They came out to announce that they'll be looking for a new CEO, so that had a negative impact on that stock. But all in all, I guess our market was off to a negative start because of what happened in the US on Friday, and we saw the St. Louis Fed president coming out to say that the decision about no tapering in September was a knife-edge decision, and perhaps we could see a tapering in October. And of course that had a massive impact in terms of the commodities market. In fact, gold prices saw the biggest decline that we've seen in 11 weeks. So unsurprising to see the gold stocks being absolutely smashed on the market today. In fact, Newcrest Mining was down by about 8%, and that's the biggest gold stock on the Aussie market. So you can just imagine what the smaller gold stocks were like today. We saw Perseus down by 15%, Alaska Gold down by a massive 12%. The other main theme on the market, I think, came from the Chinese Flash HSBC PMI numbers. Now, these are better than expected. So the Aussie dollar jumped up, and when the Aussie dollar
Really are the whipping boys of any sort of tapering talk these days.
It's been hugely volatile, but I guess one of the things that has helped gold prices is really the devaluation in terms of the US dollar, and that's been throughout quantitative easing. As we start to get tapering, the scenario is probably going to be that the US dollar strengthens, and that's a negative scenario for gold. So while in the short term the risk is probably to the upside for gold, in the medium to long term the trend does look like it's a downward trend, and that's really because of the strengthening in the US currency that's forecast to happen. So we're forecasting a strengthening in the US currency medium to long term because of the tapering as well as the strengthening in terms of the US economy, and that's going to be the negative for gold medium to long term.
You've mentioned it before, Treasury Wines, not the greatest days out today on market. Their CEO being pushed aside.
I don't think a huge surprise here. We've seen massive write-downs to US inventory and the US business, and that's really as I guess Treasury Wines tries to shift from some of its low-cost products into some of its more higher margin products. And I guess one of the problems has been that in the US it's had this build-up of inventory, and some of these low-cost products are designed to be drunken pretty much straight away. So if you have these wines in inventory, they need to be destroyed or heavily discounted to be moved. And really what we're seeing in the US at the moment is heavy discount of these products to try and move it. So they are searching for a new CEO. There will be some key challenges, and the key challenge will be the US, the heavy discounting, and trying to put an end to that heavy discounting, because once you start that discounting cycle, it does become difficult to get out of it, because customers do expect discounting in order to buy the products. So if we have a look at Treasury Wines, the US is important. It makes up about 44% of revenue, followed by Australia and New Zealand, which makes up about 35%. So while we have seen strength in Europe, Middle East, as well as Africa, as well as Asia and Australia and New Zealand, that's been more than offset by the weakness that we've seen in the US. Having said that, once you do start to see new management come through, a new strategy, often this can be a catalyst for a turnaround in the share price. So while we have seen the shares coming under a fair bit of pressure today, I guess we have to watch to see who the new CEO is going to be permanently, as well as a new strategy, and that could be a signal that things may be ready to turn around at Treasury Wines as well as the share price.
It's a good longer term to mid-term investment, Macquarie?
The reason why Macquarie has been struggling in the past is because of the market-facing businesses which have been weak. We have a look at where the strength has been. It's been in the wealth management business or the corporate financing, leasing businesses. But what the market's done over the last 6 months is it's priced in recovery. We know that the Australian market has been doing fairly well. In fact, in 2013 so far, the market's up 13.5%, and Macquarie's stock in 2013 is up by 38%. So it's priced in this recovery. But Macquarie today did did give a few weak signals out to the market. Now, it kept its full-year forecast the same, that it does believe that the full year is going to be better than the previous period. But the first half of this year, it's saying that it's similar to the second half of the last financial year. So a pretty flat result for the first half of the year compared to the second half of last year. Not only that, previously they had been forecasting growth for their fixed interest commodities and currencies division, and now they're forecasting a flat result there. So there were a few negative signals in the update today, and the shares falling, I think, by more than 1.5%.